The year 2025 will be remembered as the moment when politics, markets and technology collided in ways that reshaped the global economy. In Washington, under US President Donald Trump, a sweeping tariff campaign redrew trade maps, rattled allies and rivals alike, and forced investors to adapt in real time. On trading floors from New York to Sao Paulo, stock tickers flickered with new records. In the background, a quiet revolution in artificial intelligence pushed the value of Nvidia above $5 trillion and turned a Chinese startup called DeepSeek into a household name. Gold and Bitcoin soared to fresh all-time highs, while Brazil's stock exchange rode a powerful rally even as the country battled avian flu and a sprawling financial crime scandal. It was also the year of a new vocabulary on Wall Street. When Trump's tariff threats began whipsawing markets, short-term traders quickly came up with a strategy and a joke to describe what they were doing. They called it TACO, an acronym for Trump always chickens out. The play was simple: buy stocks when the president announced tough new tariffs and prices sank, then sell when he partially backed down and markets recovered. Behind the humour was a hard reality. Policy from the White House had become a trading signal in itself, and the line between political theatre and economic impact had rarely seemed thinner. The turning point came on April 2, when Trump declared what he called Liberation Day and announced broad tariff reciprocity against almost every US trading partner. The new rules set a minimum 10% tariff on imports across the board, with higher rates for dozens of countries. Standing outside in the wind, pointing to a chart he joked was too big to hold steady, Trump spelled out his logic on China. So if you look at that, China, first row, China, 67%, he said. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%. So we're going to be charging a discounted reciprocal tariff of 34%. In other words, they charge us, we charge them. We charge them less. So how can anybody be upset? They will be, because we never charge anybody anything. But now we're going to charge. For supporters, it was long-delayed payback. For critics, the start of a dangerous escalation. Nowhere was that escalation more visible than in relations with Brazil. Initially subject to the standard 10% tariff, Brazil suddenly found itself singled out. In July, the White House announced that tariffs on Brazilian products would jump to 50%, with Trump publicly denouncing the legal cases against his far-right ally, former President Jair Bolsonaro, as an international disgrace. Brazilian exporters watched nervously as ships waited in ports, containers stacked high and contracts were renegotiated. 3 weeks after imposing the higher rate, the US released a list of nearly 700 Brazilian products that would be exempt, giving some relief but also underscoring how unpredictable trade policy had become under the new regime. The political drama culminated in October in Kuala Lumpur, Malaysia, where Trump met Brazilian President Luiz Inácio Lula da Silva on the sidelines of a larger summit. Seated side by side, with cameras rolling and ministers shuffling papers nearby, Lula described the talks as frank and constructive. Trump, pressed by reporters on whether he would ease tariffs on Brazil, signalled a deal was within reach. We're going to see, we're dealing with it right now, and we'll be discussing it for a little while, and I think that we will probably come to a conclusion pretty quickly, he said. We know each other. We know what each other wants. I think we will come to a conclusion. Weeks later, Washington announced the removal of a 40% import tariff on selected Brazilian products, including coffee, tropical fruits, tomatoes, beef and other farm goods, a move welcomed by producers from Minas Gerais to Rio Grande do Sul. Yet the tariff confrontation was never just about Brazil. The broader story of 2025 was a trade war between the world's two largest economies. As Trump's team raised barriers on Chinese imports, Beijing struck back, targeting sectors from soybeans to port fees and, most dramatically, the rare earths industry. In the industrial city of Baotou in Inner Mongolia, the stark landscape of rare earth waste ponds and sprawling processing plants suddenly took on new geopolitical weight. When China announced sweeping restrictions on rare earth exports, markets flashed red, The materials that go into everything from smartphones and electric vehicles to precision missiles and advanced radars were now at the heart of a global power struggle. Faced with the threat of supply cuts, the White House again reached for tariffs. Trump threatened duties as high as 100% on Chinese products if Beijing did not maintain supplies. After months of tense exchanges, the two leaders finally stood together in Busan, South Korea. Cameras captured the handshake between Trump and Chinese President Xi Jinping as they pledged to de-escalate. Xi, speaking through a translator, struck a measured tone. "I look forward to exchanging views with you on questions important for our two countries and the world," he said. Trump replied simply, "Thank you very much. It's great to have you all." Behind the carefully chosen words was a concrete understanding. Washington would roll back part of its tariffs, while Beijing would ensure the continued flow of rare earths so crucial to the global tech and defense industries. Even as the White House confronted Beijing and Brasilia, it was also engaged in an unprecedented clash at home with the country's own central bank. Trump's public criticism of the Federal Reserve intensified, with demands for sharp interest rate cuts and open speculation about replacing Fed Chair Jerome Powell. The usually cautious institution suddenly found itself at the center of political storm clouds. At the Fed's imposing headquarters in Washington, with its marble facade and Federal Reserve inscription, Powell felt compelled to defend the bank's independence. "I think that having an independent central bank has been an institutional arrangement that has served the public well," he said. "And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend." At the same time, the White House directed its fire at individual Fed officials. Board Governor Lisa Cook faced accusations from Trump that she had been involved in mortgage fraud, a charge she rejected. When the president ordered her removal from the board, Cook refused to step down, citing the legal protections designed to shield monetary policymakers from political interference. For financial markets, the confrontation was a reminder that the institutional guardrails underpinning the US dollar and global credit flows could no longer be taken for granted. Every speech by Powell, every rumor from the West Wing was scrutinized for clues as to whether the Fed could keep setting policy without presidential intervention. Beyond Washington, 2025 was also a year of shifting alliances. In Latin America, Trump deepened ties with Argentina's Libertarian President Javier Milei. The two men appeared side by side at the White House, where Trump, answering a question from reporters, sent a clear political signal. Asked for his message to the Argentine people, he replied, "We love them. Be there for them, and they have a great leader." The warm words came as the US extended a $20 billion financing line to Buenos Aires, providing crucial support during a period of sharp peso devaluation and soaring inflation. A series of trade deals with Argentina and Central American countries such as Guatemala, Ecuador and El Salvador followed, aimed at easing the cost of food staples like bananas and coffee for American consumers. While political leaders shook hands and signed agreements, investors searched for safety. Gold, the traditional refuge in times of uncertainty, almost doubled in price over 2 years, climbing to a record of around $4,300 an ounce. In bullion vaults and trading rooms from Sydney to Paris, bars were stacked, polished and carefully stored as demand surged. Jewelry shops saw renewed interest in gold, bangles and coins as households hedged against inflation and currency swings. At the same time, Bitcoin etched a new chapter in its volatile history, smashing through successive records before peaking at about $126,000. The longest federal budget shutdown in US history, a political standoff that froze government operations for weeks, was one of the catalysts pushing some investors and speculators toward digital assets. By year's end, Bitcoin had given back a significant portion of those gains, a reminder that in the search for safe havens, not all that glitters is gold. The corporate world delivered its own blockbuster headlines. Shareholders of Tesla approved a compensation package for Elon Musk that could, in theory, allow him to earn up to $1 trillion if ambitious performance targets are met. Musk, now serving as a presidential advisor in Washington, used his growing visibility to push for a different vision of trade. I hope it is agreed that both Europe and the United States should move, ideally, in my view, to a zero-tariff situation, effectively creating a free trade zone between Europe and North America, he said. And that's what I hope occurs. And also more freedom for people to move between Europe and North America if they wish. So that has certainly been my advice to the president. His comments highlighted a striking contrast. Even as the administration weaponized tariffs, one of its most prominent advisors was publicly calling for dismantling them. Another icon of capitalism chose 2025 as the moment to step back. Warren Buffett, the legendary investor who turned Berkshire Hathaway into one of the world's largest conglomerates, announced his retirement as chief executive after decades of annual shareholder meetings in Omaha that drew tens of thousands. Buffett handed the reins to longtime deputy Greg Abel. The transition was closely watched not only as the end of an era, but also as a test. Could the Oracle of Omaha's disciplined, value-driven philosophy survive in a market increasingly dominated by algorithms, meme stocks, and speculative bets on artificial intelligence? Nowhere was the AI boom more visible than in the meteoric rise of Nvidia. Riding demand for the powerful chips that train and run advanced AI systems, Nvidia became the first company to surpass $5 trillion in market value. Conference halls and tech expos featuring the company's GPUs were packed, and the letters H100, the name of one of Nvidia's most sought-after processors, became shorthand for the infrastructure behind the new AI economy. But 2025 also showed that the US no longer had the field to itself. In January, a Chinese startup called DeepSeek unveiled its R1 chatbot. The app, which promised capabilities comparable to American rivals at a fraction of the cost, shot to the top of download charts and sent a shockwave through US tech stocks. For a moment, it encapsulated a broader fear that China's push into artificial intelligence could challenge US dominance in yet another frontier technology. Still, American tech giants were not without victories. In September, Google scored a crucial legal win in Washington. A federal judge imposed strict new conditions on how data could be shared in an effort to restore competition in online search. But the ruling stopped short of the most radical remedy sought by the government, forcing Google to divest its Chrome browser. For the company and its investors, the decision was a relief, a sign that regulators were willing to push for reforms without breaking up the underlying business model that had made Google one of the pillars of the digital economy. South of the equator, Brazil's economic story was one of turbulence and resilience. In the aviation sector, GOL, one of the country's main airlines, finally emerged from bankruptcy proceedings in the United States. Its rival Azul, facing its own financial pressures, sought bankruptcy protection under US law to restructure its debts as part of a negotiated plan with creditors and partners. The legal shield allowed planes to keep flying and employees to keep working while lawyers and bankers hammered out a viable path forward. For Brazilian travellers and tourism operators, the continued operation of both carriers was essential in a country where air travel is the backbone of domestic mobility. At the same time, investigators were uncovering darker currents in the Brazilian financial system. Operation Carbon Neutral, led by the federal police with support from the Federal Revenue Service, exposed what authorities described as a massive fraud and money laundering network in the fuel sector. The scheme allegedly used fintechs and around 40 investment funds to hide assets and move illicit money through the formal economy. Images of federal revenue vehicles and agents entering buildings in Sao Paulo became a familiar sight on nightly news broadcasts. In November, the central bank ordered the liquidation of Banco Master, a mid-sized institution caught up in the turbulence, while businessman Daniel Vaccaro was arrested under Operation Zero Compliance, accused of involvement in the issuance of fake credit instruments. The cases raised hard questions about oversight in Brazil's fast-growing fintech industry and the vulnerability of its financial market to sophisticated criminal schemes. Despite the scandals, investors kept pouring money into Brazilian equities. The Sao Paulo Stock Exchange, B3, recorded session after session of fresh historic highs. Bank shares, along with mining giant Vale and state-controlled oil company Petrobras, led the rally. Part of the optimism came from abroad. As the US Federal Reserve began cutting interest rates, global capital looked for higher yields and new opportunities, and Brazil's large liquid market stood out. At home, expectations that Brazil's own benchmark interest rate, the Selic, would be cut in 2026 added fuel to the momentum. For all the noise of politics and crime investigations, the message from the trading floor was straightforward. Investors believed that, at least for now, Brazil was on an upward path. That optimism was tested in May, when an outbreak of avian flu at a commercial farm in Rio Grande do Sul threatened one of Brazil's most important export sectors. As the world's largest supplier of chicken meat, Brazil had to move quickly. Exports to several key markets were suspended, and images of production lines at poultry plants underscored the potential scale of the problem. Rural producers grew anxious as refrigerated containers sat idle and ships delayed loading. Almost a month after the first case was confirmed, the Ministry of Agriculture declared Brazil free of avian flu once more. Industry leaders sought to reassure customers. According to the Brazilian Association of Animal Protein, all major importers of chicken meat gradually resumed purchases, and by November, China, the last major importer of chicken meat that had been closed, reopened its ports to Brazilian products. For farmers and factory workers in the sector, it meant that a year that could have ended in disaster instead closed with relief. Viewed together, the events of 2025 form a complex, sometimes contradictory picture. On one side, a US administration that embraced tariffs as its primary tool of economic policy, sparking trade wars even as some of its own advisers argued for zero-tariff free trade zones. On another, central banks and regulators fighting to preserve their independence under intense political pressure. In boardrooms, investors made trillion-dollar bets on artificial intelligence and reshaped leadership at the top of some of the world's most influential companies. In the streets and factories of Brazil and Argentina, ordinary workers felt the consequences of decisions made in Washington, Beijing and Brasilia as currencies swung, exports halted and then restarted. If there is a single thread running through this economic retrospective, it is uncertainty and the ways in which markets, governments and societies responded to it. Whether it was gold bars stacked in a Paris vault, Bitcoin spinning on a trader's screen, fertilizers and fuels moving through newly scrutinized networks, or coffee cherries being picked in the hills of Minas Gerais, each image captured a world trying to adapt to rapid change. The tariff wars, AI breakthroughs, financial scandals and health scares of 2025 did not resolve the tensions at the heart of the global economy. But they did reveal, more clearly than ever, how deeply connected those tensions have become, from the White House and the Federal Reserve to Bauto's rare earth plants and the chicken processing lines of southern Brazil.